Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on the daily timeframes, weekly timeframes for BTC, giving you my thoughts and opinions on where I think the price action is heading. Now as I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with all the videos that we do here at Cheeky Crypto. Now if you haven't yet joined us in Discord, guys, you are missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's get right into this thing, right? Let's check it out, right? We're going to be taking a look at Elliott wave theory. We're taking a look at smart money concepts. We're taking a look at support, resistance, supply, demand, and all that wonderful stuff. We won't be jumping into the on-chain stuff today. Not much has changed from yesterday, so we'll save that over the weekend. We'll see what's going on the with the on-chain data tomorrow or Sunday. We'll see how that kind of goes. So let's go ahead and start things off with our kind of bigger macro daily chart on Elliott wave theory to start with, okay? So let's just take a look at kind of what's going on in here. We do have the emergence of potential bearish structures. Okay, so at the moment we are right in line with a 3-wave count. There's nothing unusual, nothing too much to be kind of concerned with or anything like that. The obvious concern is that we are looking to end in 5 waves. We started with 5, we must end in 5. This is a fundamental basic of Elliott wave theory. So we know that we are looking for a move to the downside that ends in 5 waves. Now, and here we have ourselves an interesting situation. We are yet to actually see this 5-wave structure emerge. This is where the things start to get a little bit difficult when it comes to this bigger macro picture. And the big concern or the big bearish issues here remain to be very much a concern for many. So over here, we can see we had a high. And we can see it up here in the top right-hand corner, just under H. The high is 30,036. Okay, so I'm going to just zoom in on that wick and make sure that I put my Fibonacci retracement tool right there on 36, and it's 18 cents too high. I'll just go ahead and knock that down to get it to 30,036 exactly. Okay. Why is this important? Well, we're looking for a couple of things, right? Straight off the bat, we know that we're right in the zone right here. Okay. For our typical 1-to-1 ratio, but we do not have the correct wave count to be looking at that as a complete zigzag pattern. So the big concern and the big bearish issues come down here at the 1.618. Okay, that is 23,937. Okay, this particular area is what's going to convert our 3-wave structure into a 5-wave impulsive structure. Now, why is that important? 5-wave impulsive structures are basically determine whether or not we're in a trend or a downtrend or an uptrend from an Elliott wave theory point of view. A 5-wave impulsive structure essentially is a trend. Okay, so down here on our daily time frame, if I come into my settings here, I just want this on the daily, and I'm going to assign it the 1.618 and remove that one. There we go. Okay, so that there is our 1.618 bearish structure, and it's going to be a big concern because in here, we do see ourselves with our structures emerging. So we have a 1, 2, potentially 3, looking for 4 and looking for 5. And then inside there's another one right in here, which is a wave 1, wave 2, wave 3, potentially 4, then 5, and we hit this 1.618. And if we do that, then of course we have our structure here, which is wave 1, wave 2. All of this is wave 3. We come up for wave 4 and we come down into wave 5. Then you might think, oh, well, that's okay. It's not like it's a new lower low or anything. But one of the fundamental basics of these impulsive structures is that if you start with 5 waves, you must end in 5 waves. So at best case scenario, we'd end up with a zigzag pattern taking us down probably into our Z wave structure of what we've been talking about for a while. So this is kind of where we are at the moment, and it's a concern. It's not confirmed, but we do not have the structure to kind of think about this being the end of our zigzag. Okay, so for now, we have to kind of be aware that 23,937.33 is going to be a pretty bearish time for Bitcoin. And of course, we can see that we're below the daily 50 EMA and we're above the 200 daily EMA. And if we do come down lower than that 200 EMA, lose that as support levels, then we are likely to see further downside of quite significance. Now, if we measure the internal count here for that wave 3, let me just move this over. I'll just do it an approximate area with high as 29,820. So I'm a few dollars higher there. So I'm just going to try and knock this down the best I can. I might actually just zoom in and make this a little bit quicker for myself. Just bringing this down to the $20 level. Well, 45 cents a little bit too high, but we'll come down and get that exactly on the nose right there. fact, it's going to be 1 cent off, which is fine. So if we come down here, you can see that our 1.618 target just got hit. So if I go ahead and take a look at this low, which is 26,120.74, we can see that right down here, we were expecting that that low to be 26,108. Okay, so we know that we've come down lower already, or actually almost as low. Actually, sorry, we're not quite there yet. The low was 26,120. So we're close to hitting that 1.618 target. And once we do that, then we confirm that we're in a much bigger kind of bearish situation on the micro count. So there's a lot of things to kind of be concerned with on this daily chart. So trying to zoom out just a fraction here, just so you can kind of see what's going on, is this here could be our reversal, and this could be the tipping point for Bitcoin slipping down further. Now, emphasis on could be. It's not a guarantee. It's not guaranteed yet, and it's not confirmed yet. Okay, we can still kind of break these structures and still kind of, work our way back up. So there is still that bullish idea that still remains to be true. But as we kind of come down into these lower ranges, it becomes less and less likely that we're going to do those kind of rallies to the upside. So we're looking pretty bearish here for Bitcoin at the moment. So it'll be interesting to kind of see how that plays out. Now, as I said previously, we do have the big kind of idea that we have this macro low point here. It's way, way off, right? This is something that would take such a long time to play out. And it's not something that we necessarily want to see. In reality, what we're really wanting to see is the idea of a W, X, Y, X, and Z, because the Z wave in itself actually gives us a pretty interesting area. It doesn't have to be a new lower low, although I would suspect it is going to have to be, but I don't think it's a guarantee by any stretch of the imagination. We're basically looking for 12,500 to 19,700, and 19,000 is a pretty good number when we take a look at the smart money concept side of things. So this is a much better structure, I think, for retail investors, although there's no guarantee that that does play out. So we have ourselves two kind of area targets, one which is going to be slightly better for the people, and one that's going to be just slightly better for smart money, because that's essentially where they're going to be scooping up if that price does come on down there, which is a long way off. So not something that I want to kind of acknowledge as a possibility at this point in time, but something that is there, and we should kind of keep it in the back of our heads that there's still this idea that there is room to the downside. That being said, at the most part, this is a nice healthy correction at the moment. We are starting that trend move to the downside. Yes, it's bearish, but it doesn't mean that we're going to fill out some of those fair value gaps from the smart money side of things, which we'll take a look at in a minute, and of course will allow for good accumulation. So with Elliott wave theory kind of telling us that we're starting this bearish reversal structure and it's going to potentially turn into an impulsive structure, we do have downside on the horizon. Now, smart money concepts hasn't quite caught up with us yet, at least from a Elliott wave theory point of view. Okay, on our daily chart, we have this bullish change of characterization. This essentially is telling us that we are in a bullish market right now, and this is just a healthy correction. Okay, so smart money concepts from time to time does give you false flags, and this may be one of them. Okay, along with the higher highs and the higher lows that have a tendency to have a breakdown from, we also find ourselves many different bearish kind of situations or flags kind of being presented to themselves, right? This could be a big bear flag or the biggest bull trap of all time, in my opinion, and something that we need to kind of consider. But also, it's important that we know that smart money concepts here is saying, yeah, we can come down quite a bit. In fact, we can come down all the way down to $19,000 and still hold our bullish structure. And again, that isn't too far off thinking about this Z wave structure not requiring a new lower low. So those two things, from certain points of view, do come aligned and do start to give ourselves the idea that we are in a bullish market. That being said, though, we do find ourselves with this trend-based structure moving down, and we're finding ourselves with a reasonable amount of consideration or concern, I should say, with what is going on at the kind of the moment on the daily chart, right? So if we think months down the line, sure, things could potentially hold up quite well, and we might be able to kind of rally up again at some point in the future. But on the kind of the here and the now of the next few weeks, it doesn't look overly promising. So when we take a look, we can see all these red areas. These are all basically internal sell order blocks, and all these green orders are down here. These are internal order blocks for buying, right? So we have the buyers and we have the sellers, and right now we're somewhere in the middle. Ultimately, though, if we throw the Gaussian channel on, we can see that we're coming down from our daily, and we're about to go underneath the Gaussian channel, which is the first time this has happened for a little while of significance. So it'd be interesting to see how that plays out. Now, bring it to the weekly. And you can see that we are turning the Gaussian channel down and price action is pushed up again. We've got two big fair value gaps, and we can see that we're just testing the midline on that Gaussian channel, also the weekly 50 EMA. So a good bouncing point potentially. We are concerned over the monthly though. If we take a look at the monthly, we can see that on the first time for the monthly close position inside was August 2022. Okay, so this is something that we haven't seen on a monthly time frame before with the Gaussian channel. It's only ever been green, according to Binance. And, well, we closed inside it. And historically speaking, and that has been a bearish tail on the weekly. Does that now translate into a bearish tail on the monthly? I don't know. Interestingly, we can see 14K on here as a fair value gap on the monthly time frame that hasn't been filled out yet. So a move down there to fill that gap out is something of interest to me as well. Ultimately, very, very interesting times do lie ahead here for Bitcoin. And one way or another, we're going to get confirmation as to whether the Gaussian channel is hailed still as the be-all and end-all for predicting bullish and bearish markets. At the moment, we don't know for certain whether or not the variables changes that we've seen in 2022 and 2023 so far actually are going to invalidate the idea that the Gaussian channel is predictive about these things, or whether or not it's going to still remain true that it predicts out the bullish and the bearish times. So that's the jury's still out on that one. We'll have to see how that one kind of plays out. Now, from our supply and demand areas, we can see that we got rejected from the supply area. This is something we've been talking about for months. It's nothing unusual. Basically, previous areas of buying where people got trapped into, they can come out of those positions in these areas here. So you find that this is where supply enters the ecosystem, which was previously demand. So think of it as maybe support gone to resistance. However you kind of want to look at it, everything really boils down to supply and demand though. So supply and demand is technically what these things are, and they get ranges. So this particular range, 28,881 to 31,848, again hasn't changed, and we see ourselves moving down. The next key range that we're looking for is 24,316 to 25,231. This is another area that was previously supply, and is that supply now turning into demand? And again, it's a reverse thinking here. Basically, people were selling here, okay, because they thought price was going to go down. Price rallied up higher than where they sold. Price comes back down to where they sold. They can re-enter should they want to, so therefore it becomes demand. It's interesting to see whether or not that is going to be the case or not. Time will tell. And when we go down lower than that, and if we go down lower than that, the next key areas really are going to be 20,892 to 21,442. Again, a previous area of supply. A previous area of supply turning into demand, and whether or not that's going to hold as our support, don't know. We'll have to see how that kind of goes as time progresses. Right now, we're looking for price to react to some key levels. We've got the 50 and the 200 EMA all around this key level down here at 24 to 25K. So that's the obvious area that we're looking for, see some kind of relief rally. And again, the big concern here on this weekly time frame is that we have ourselves some kind of 5-wave structure completing down here. We have some kind of relief rally coming back up into the supply zone. And then we really do have a bit of a move coming down here in a big 5-wave structure like this. And if we do a 5-wave structure like this, guys, then we're going to have another relief rally, bear market rally, only to then go ahead and finish that off with another 5-wave structure, which would actually bring us right down into this previous area of supply, potentially turning into demand. And that is on a much bigger scale. And again, this is the area that I've been talking about for quite some time now, 11,600 to 13,900. And that there would be a very nice way to end this bearish market. It would be right in line with our Z-wave structure, and it would be a zigzag pattern to finish it off. And that would be the neatest possible way that, in my mind, to finish off the bear market before we start to go up into the next bullish market. Timing that's hard. It could be 2024, could be the end of 2023, could be 2025. I don't know. Elliott wave theory doesn't time the market. It only shows you how people are reacting emotionally to price movements. Okay, so understanding these things can be helpful. It can help us understand whether or not we want to just sit on our hands for a little bit, wait for the prices to cool off and then accumulate later, or whether you just want to adopt a dollar cost averaging strategy and just slowly build up your position over time. All those things are definitely possible and something you're going to have to consider. But do bear in mind, I'm not a financial advisor, cannot give you financial advice. All I can do is give you my thoughts and opinions on the data as I personally see it. And if you do have access to a financial advisor, you should probably consult them. With all that being said, done and out of the way, if you found it useful, smash the like button and I'll catch you all in the next one. We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.